Now, I want to speak about three stocks that are boring stocks, been trashed the last 4 years really for these stocks. And if I see these as opportunities, okay? So listen, I back this up to, let's call it, I back this up to like the fourth quarter of 2021, which was the fourth quarter of 2021. That was, close to 4 years ago now at this point in time, right? Now, the interesting thing is, since that time period, Whirlpool stock has gone down 56%. Absolute trash. UPS, what can Brown do for you? Remember those commercials? Brown can't do a whole lot of anything except make you lose money, right? Stock down 57% over the past few years. Insane. RH stock, oh my gosh. Down 66% in about the past 4 years, roughly. Now, since that fourth quarter, right, I backed this up. This was since, kind of like October 2021. Look at the Qs. Qs up 52% since then. S&P 500's up 42% since then. So it's not like the market's like been in a 4-year crash and like total dumpster fire. No. It's just those like specific stocks. So, but my opinion is here, these actually might be interesting buys over the next 3 to 6 months. Now, which one is the most dangerous of these stocks? RH by a mile. For sure the most dangerous, because they count on a very niche segment of the market, the luxury high-end, customer. Additionally, their balance sheet's bad. I mean, it's so sad because this company, if we went back 3 or 4 years ago, I can show you a company that had such an incredibly strong balance sheet, and they ruined it. 3 years ago, this company's balance sheet was pristine. It was beautiful. They could weather any storm. Now this company's balance sheet is absolute sad, depressing balance sheet. It's incredible what the CEO has done there in terms of just depleting that balance sheet of their massive loads of money they had sitting around. By doing a massive share buyback and those sorts of things. Ugh. So anyways, that is what it is. RH is the most dangerous, but it could be an interesting buy over the next 3 to 6 months. UPS, I think, is actually rather intriguing. UPS has a couple issues, though. Okay, now obviously we all know UPS. UPS is going to remain relevant, going to remain around for a long, long time to go in the future, right? But I see a couple of problems with UPS. One is they have to go against 3 big competitors, USPS, FedEx, and Amazon. It's tough. It's a tough business, right? Now, USPS, a lot of times, USPS, from my understanding, has lost money for like the longest time, United States Postal Service, but they do undercut. And I know this because we've priced out, obviously we ship our membership cards all around, right? When somebody joins a private stock group, we have to ship our Steel membership cards. When somebody joins 1000X, we ship them a Steel membership card, right? When somebody gets into the 5-figure club in the Patreon, we ship them an award for that. When somebody reaches 6 figures in the private stock group, we ship them an award for that. When somebody reaches 7 figures in the portfolio, we send them an award for that in the private stock group, right? So I actually do a lot of shipping. I spend, easily thousands of dollars a year on shipping of just Steel membership cards and awards and stuff like that. But it's probably 5 figures plus. Like, I don't know what the number is. It's not my department. But my guess is easily many thousands of dollars, if not 5 figures plus a year, between all the different shipping of these cards. And then we got to pay for the cards to be shipped here. And then we got to ship them out from there. And then we got to, but guess what? All of that, at least on our side, we've priced it out. And guess who ends up always winning? USPS. They always end up undercutting. So it always ends up being the most affordable thing we can do for shipping is always USPS. I don't think they do the best job. I think, if I went with FedEx or UPS, I think it would be better. But like FedEx and UPS are just much more expensive. So it's like, do I want to go with what's much more affordable or much more expensive, right? Now, additionally here, the problem with UPS also is they're a very union workforce, which is great if you work for UPS. You probably make bank. Like, what the UPS drivers are making nowadays? It's phenomenal. Like, they're doing very well for themselves. If there are any UPS drivers watching us right now, shout out to you. Congratulations. You're doing well for yourself, okay? That's a problem for the company, though, when it comes to profitability, and they've just been killed over the past year when really it comes to all the increases in wages and whatnot they had to do there. So that makes it tough as well, and every few years there's like a renegotiation that happens. So right now would actually be the best time if UPS had to do a negotiation right now, because they could say, look, our stock price is down massively the last 4 years, and look at how bad things are and those sorts of things, right? But UPS could be interesting. It's a beaten down dog, could be intriguing, but maybe the one I like the best of everything actually might be Whirlpool. Everybody knows Whirlpool and many of the brands that Whirlpool owns, right? Very popular appliance maker, washers and dryers and refrigerators and ovens and microwaves and blah, 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 okay? The thing that's interesting with Whirlpool is much from, what I understand about their business versus their competitors, which their competitors would be companies like LG and Samsung and people like that, right? Those competitors, from my understanding, use a lot of steel and other parts that are made outside America. We know all these tariffs have gone through, right? If anything, this should help, in theory, Whirlpool, okay, over the next several years, because these other companies are likely either going to have to maybe potentially start losing money, or they're going to have to go up in price. When they go up in price, they're going to start being, Whirlpool's going to become much more competitive on the pricing front, right? Which is intriguing. And so that should be a good thing for Whirlpool over the next few years. Additionally, we're thinking about a situation here where the housing market, if I had to say, is the housing market going to get better or worse if we look at the housing market, 2023, 2024, 2025, those 3 years, versus 2026, 2027, 2028, what would be a better 3-year span for housing? My opinion, without question, is 26, 27, 28 will be massive amount more people moving than 25, 24, 23. The housing market's been dead. 23, 24, 25, because we know interest rates went so high, mortgage rates went so high, that everybody said, I'm not moving. Like, unless you really have to move, people will be like, nah, I'm not moving. I don't think that's going to be the situation. I think housing numbers, in terms of amount of people moving, is going to get much more normal in 26, 27, 28. That should be very good for Whirlpool's business model, because a lot of people don't buy new fridges and washers and dryers and all that stuff unless they move. When they move, then they're like incentivized, like, oh, let's not take this old fridge we got for 13 years. I want to get something newer, more modern, that works better, right? Or washer, dryer, all that sort of stuff. If people are just staying in the same place, a lot of people just won't get a new washer, dryer, fridge, any of that type of stuff, dishwasher, unless it breaks and they're forced to. And they're like, okay, I got to get something new, right? And then they go look for something. So I think those stocks could actually be somewhat interesting as a buy for the next 3 to 6 months, as a play really for the next 3+ years. Will I play any of them? I don't know. We'll see. There's pros and cons to all three, Whirlpool, UPS, and RH. If I had to say, like, who's maybe got the most potential upside of those three stocks, I would say probably RH, but it also comes with the most risk because of the balance sheet I spoke about, right? If I said, which stock do I probably like the best risk reward out of those three? I mean, my eyes are on Whirlpool. But UPS is a hard one not to say, you know what, maybe that's one worth, throwing a dart out for the next, 3 to 6 months, and then we'll ride that one out for 26 to 28. But we'll see when it comes to that, right? Duolingo, little dingo, I sold my puts too early. I made like 50% on those in a week, literally, right? But the truth is, I could have made more in the 75 to 80% range if I would have just held to right now, which is a significant difference. It's not a small amount of money. We're talking about we're talking about I could have made another, I would say $7,000 to maybe $11,000. Somewhere in their ballpark, roughly, depending upon, when I would have sold today or whatever. $7,000 to $11,000. And that would have been just holding it for another extra week. It's not a small amount of money, folks. So the thing is, you can't get them all right? And I mean, I made 50% in a week. I made a lot of money. I made like, what was it, 17,000 or 19,000, something like that. Did pretty darn well. Could I have made more? Yes. Duolingo could keep going down, right? And that's what I made a case for in that video. And remember when I told you guys about selling on Duolingo? I think I did it on the main channel. I said, probably selling too early, right? And I ran you through like the case for Duolingo to keep going down. And sure enough, it didn't stop going down. It keeps going down. And I don't even think it's lost to retail traders yet. And if the retail traders and investors start to bail on this stock, because it actually has a significant amount of those, whoo, you want to talk about how it really gets ugly? Let the retail trader and investors start to sell their positions in Duolingo. Oh my gosh. You could get that stock under 250 if that happens, because that would be like, pure panic would then start, right? I think this move here, it hasn't really been retail traders or investors selling. If anything, they've been net buyers in this situation. This, in my opinion, is Wall Street selling. The next nasty move would, if retail traders and investors start to lose confidence in Duolingo, little dingo, you're going under 250, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Whirlpool Corporation, WHR. Boy, has this stock been trash. Stock is down 43% the past 5 years. Just such a trash stock. I want to start a position in it in September, and I want to build out that position over the next, I would say, 3 to 6 months considerably. I view this stock as a buy anywhere in the $70 to $110 area, and I want to buy the stock all the way into the first quarter of 2026. Now, this is a multi-year play in regards to Whirlpool. This is not some short-term trade like, oh, I want to play it for the next 6 months or 12 months. No. This is a multi-year, I think, pretty exciting cycle coming for Whirlpool that's going to be pretty much the opposite of what this company's gone through the past 5 years. We're going to have the inverse of this over the next 3 to 5 years, in my opinion, essentially, okay? So, Whirlpool. Boring business. Oh my gosh, okay? Refrigerators, ovens, dishwashers, washers, dryers, all this sort of stuff. Like, what's the big deal? They own a bunch of different brands, by the way. It's not just a Whirlpool brand, but what's the big deal here? This is a boring business. I understand. But the gains will not be boring. The money made here over the next few years from 2026 to 2028, that will be anything but boring, in my personal opinion. There's going to be a lot of money to be made in the stock. I don't care what a business does. Like, if there's a lot of money to be made, you could have the most boring business in the creation of mankind. And that's fine with me. That's fine with me. I mean, heck, Palantir, one of my best gaining stocks ever. What a boring business at the end of the day. It's exciting what they can do to help businesses, but at the end of the day, it's like more like a software type, SaaS type business, right? Heck, even Tesla, one of my best gainers ever, made 2,000% or so in Tesla, along with Palantir was another 2,000% plus gainer. At the end of the day, Tesla, how do they make all their money? They build automobiles. Like, how boring, right? So at the end of the day, we could look at all businesses and be like, oh, that's so boring. At the end of the day, all that matters is there money to be made or not, okay? No, Whirlpool right now trades at a market capitalization just over $5 billion. That's for the whole company, all the brands, everything, okay? Little over $5 billion. Now, Whirlpool's net income in the past, this is where things get really compelling here, in my opinion. Whirlpool's earnings over the past few years have been dumpster fire, okay? 2022 through 2025, dumpster fire for their net income, right? I do not believe that's lasting. I believe they're going to get back to their old net incomes. Now, what are their old net incomes? Their old net incomes, this company used to bring in $1 billion plus a year in net income, folks. Now, remember where that market cap's at right now. Everybody's pricing this company like they're never going to be able to get back there. And I 100% believe they are going to get back there over the next 3 years. The worst case scenario I see for Whirlpool over this next few years is them getting to somewhere where the company used to be in kind of like 2013 to 2016, where they were bringing in anywhere from about $600 million in net income a year to around $900 million of net income a year, okay? Now, this is why this is so significant, okay? Because when you look at this company, okay, like what's going on here? You got to understand, existing home sales have been brutal the past 3 years. How brutal? We're talking, ladies and gentlemen, that home price sales have dropped and collapsed. Not dropped. They've collapsed to great financial crisis type numbers. You remember when we had the 1 in 100 year housing bust in the United States of America? That's how bad things have gotten in the United States when it comes to home sales. The only difference between this and the great financial crisis is the prices didn't collapse. The prices collapsed in the great financial crisis. Many markets went down 20, 30, some 40, some 50+% in regards to pricing. We haven't had that, but in terms of the amount of homes being sold, that's completely collapsed off a cliff. This is where we're at in the great financial crisis. This is where we're at right now. We're going through a great financial crisis in the housing market for the last several years, just without the price collapse. But in terms of people moving, now this is so significant because what happens when somebody moves? The chances they go buy a new refrigerator, washer, dryer, oven, microwave, blah, 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 all goes up exponentially. A lot of times if people are just staying in their same home, they don't end up going to buy that stuff unless it breaks. And they are forced to, I got to go get a new washer. My washer broke, right? My dryer broke. My refrigerator is not working right. Whatever, right? But that's when a lot of that happens. But the thing you got to understand about this is even more extreme. This great financial crisis 2.0 we've been going through in the housing market where home sales have just collapsed off a cliff. This is worse when it comes to existing home sales than what we face back here. Because you look at the numbers, you're like, okay, it's about the same. No, it's much worse. You know why? More people live in the United States now than back then. A lot more. How many more? Over 40 million more people live in the United States of America now than back in 2008 when we were going through the great financial crisis. Over 40 million more people. So when you look at this number, understand there was a lot less people living in the United States back here. So this is way more dramatic. This is way worse when it comes to just a complete collapse in existing home sales, right? And to kind of give you a little I wanted AI to basically put me a picture together to illustrate 40 million people. But unfortunately, AI is, I guess, not advanced enough to do that. Or maybe the numbers just broski. It's too much. Okay, you can't do that. 40 million? No, I can't fit that in a picture, right? But to give you some reference of how insane of a number that is, right? The entire state of California has less than 40 million people, right? All those massive cities, in California, still less than 40 million people. The population of Canada is around 40 million people. So we basically have added, Canada in the United States just since the great financial crisis. That's insane, right? So the next question should be your brain should start putting things together and piecing things together, right? Your little AI brain here. Why am I confident that home sales will pick up over the next several years and get back to more normal territory, right? 2026 to 2028. Why will these home sale numbers not remain dead? Let's fast forward 3 years, 4 years in the future, and we're still just at these, insanely low ranges for existing home sales. Why am I confident it's going to come back to life and not remain dead? There's 3 parts to this. And all 3 of these I see playing out. All 3 don't need to play out, and I think there's still going to be a massive pickup. But if all 3 play out, we're going to have a massive increase in terms of amount of people moving over the next several years. Okay, part 1, the price shock everybody went through with, home prices in 2022 and 2023, right? Everybody's like, oh my gosh, homes are so expensive now. That goes bye-bye in 2026 to 2028. Whenever something happens where a price goes up a lot or something extreme happens, right? There's a price shock that comes along with that. And it lasts a little bit. And I took a picture of an iPhone here because when the iPhone came out, it was around $500 and everybody was in shock. $500 for an iPhone? That's insane. Now no one even bats an eye and the iPhone sells for $1,000. The price shock went bye-bye, right? And that's just what happens when something's at a certain price for a certain amount of time. I mean, you could have even looked at home prices 10 years ago, in 2015. And if you had been, used to home prices 10 years before that or something like that, or 20 years before that, you would have thought that was high. At the end of the day, the price shock goes bye-bye as years tick on, which helps people wrap their head around buying a new house, right? Part two, we've seen weakness in regards to home prices, right? A lot of markets are seeing falling prices. A ton of markets in Florida, Texas, Arizona, Louisiana, Colorado, even some areas in California are seeing prices go down. Now, as prices weaken in a lot of these different markets, right? People start saying, okay, I like what I'm seeing here. It gets more realistic to be able to afford a home. If the prices come down, guess what? You're more incentivized to be like, you know what? Let's go ahead and move. Let's go ahead and buy a new house, right? So this is a huge component of this. And I don't see this trend switching in the short term. If anything, I see continued weakness in a lot of these markets in the short term, right? Before they kind of bottom out and then, maybe slightly head up or stay flat for a while from there. No, I don't understand. A lot of people will ask, like, what's happening with Vegas, right? I live in Vegas. Why is Vegas not on the list? We know Vegas got hit the hardest of any. I don't think there's any home market in the United States of America that got hit worse than Vegas. Prices fell well over 50%. Why is Vegas not on this list of all these, basically states, cities that, we see home prices falling? You think you got to understand about Vegas, right? We have a few things working for us. The mountains surround the city. There's been such an increase in population, such a build out that we're at the end of the mountain ranges. My house, literally, what's right behind my house? It's not more houses. It's a big, big mountain hill, whatever we want to call it. You can't even build on it, okay? And so this is what's going on. And then you have all these Californians always moving here to Vegas, right? And you have no state income tax, which can attract even folks that are more toward retirement age, retirees. A lot of retirees love to move to Vegas all the time, right? People from across the country love to move to Vegas because they look at it as, hey, there's no state income tax there. If I can make the same amount of money, I'm going to have a lot more money in my pocket versus paying another 5% to some state you live in, right? So you always kind of have that. And that's why Vegas is, doesn't really see that weakness here. If you look at the population in Clark County, 2010, 1.9 million. Now we're up to about 2.4 million people roughly live in Vegas, right? And by 2040, 2.9 million are supposed to live here, which, their estimation might end up being low there, okay? Now, part three of this whole story, mortgage rates. We know two big factors come in when you think about the financial side of somebody moving. Two big factors. What's the price of a home? What's the mortgage rates? We've already topped in regards to mortgage rates now at this point in time. And we are in a multi-year downtrend for basically mortgage rates, right? We were on a several-year uptrend for mortgage rates where that 2023 top. Now we're on a several-year downtrend. Now, if inflation remains, let's call it sleepy over the next few years, the Fed continues a lowering cycle, we're going to get these mortgage rates likely. I do not expect us to get down to these ranges we were in 2020, but I do expect us to get more into that 5% range, which would be a very healthy number where you get a ton of people moving. And I think we probably get there. My guess is in the next year, maybe year and a half. And so if that plays out there, that's pretty meaningful for a company like Whirlpool, for the housing market, get people off their butts and moving, right? Now, additionally here, the company has over $1 billion in cash and cash equivalents, right? So they can ride out the end of this little mess, and it's a mess short term, right? You have a lot of competitors have flooded the market before the tariffs with a lot of inventory. But I'm not investing in Whirlpool for their 2025 numbers. I don't care what they report next quarter. I don't care what they report the next quarter, because those are the next two 2025 quarters. I have 0%. I'll look at the numbers. I'll still grade the income statement, balance sheet. I do not care at all what Whirlpool reports for numbers the next two quarters. They could miss by 1,000 miles, and it means nothing to me. Nothing. All that matters for me is what 2026 numbers look like, 2027, and 2028. That's why I'm investing in this stock. But they have plenty of cash to ride out the rest of this little short-term situation that's going on here for Whirlpool, okay? So my belief here in regards to Whirlpool is Whirlpool gets back to $1 billion plus of net income, 2026 to 2028, right? If they do that, I think the company's going to a $10 billion plus valuation, which would put them at about a 10 PE or so. So let's call it, maybe they get a little over $1 billion of net income. Maybe they're at an 8 PE, somewhere around there roughly, right? 8 to 12, let's call it. Now, 8 to 12 PE is insanely low for the stock market. Insanely low, ridiculously low. But understand a company like Whirlpool is never going to trade at some ridiculous high PE when they're in a major profit cycle. And the reason being is people understand the business is cyclical. So they might be able to do $1 billion or so of net income for 3 or 5 years straight. And then we have the next bust, and, Whirlpool all of a sudden is in a situation like they're in right now where they stop making nearly as much money, right? So you're never going to get a crazy PE on this. This is no Palantir where you're going to command a 450 PE ratio or something like that, okay? It's just not that sort of stock, and it doesn't need to be for me to double up my money, right? And so I view Palantir as I get a double up over the next few years, and then I'm in a situation where I can cash at that time, or I can hold it long term. Whatever way I want to play it is whatever way I want to play it. But I kind of look at Whirlpool as a double up opportunity here, okay?